Idea is a show where we look at misfires, mistakes, and miscalculations from all throughout history.
I'm Tony Southcott.
And I'm Albert Berg, and Tony has our bad idea for the week. Tony, what are we learning about today?
We're going to be learning about payday loans, which statistically 5% of you guys have actually had.
Okay, Dad. That's a joke, but also, for real, my dad hammered this into me as a young lad. Don't get a payday loan. Don't get a credit card. Be in debt as little as possible. I'm looking forward to reliving all that, Tony. What's the specifics here? I'm sure you have numbers and all kinds of
I've got a fair amount
stories.
of numbers coming up. But as I said, about 5% of all households have gotten a loan at one point or another from one of these payday loan places. They're so prevalent that they outnumber both McDonald's and Starbucks in the United States. That's in a country that feels like there's more square footage of McDonald's locations than square footage of, say, Rhode Island. It's just a massive amount. And I actually did the numbers on these because I was curious. If you were to add up all of the interior space of McDonald's, you would actually have over 2 square miles of internal space of just McDonald's in the U.S., or a little over 5 square kilometers for our Metro friends.
That's really scary. I'm imagining like the McDonald's, right? The you never get out of.
Just a maze of chicken nuggets and clowns.
Yes. It's like a SCP Foundation article.
It's just a weird little alternate universe. Somebody who designs VR, get on this. Anyway, a payday loan, quick cash, or 7,000 other names that these places go by, is a small loan that you get where you are leveraging your next paycheck to get the cash today. You get the money early so you can pay rent or some bills, or copious amounts of drugs. Then the payday loan people take a fee based on an insanely high percentage rate that must be collected when your next check lands.
Now, this fee, the way it's calculated, is generally, in my understanding, it's intended to be like, hey, you're getting the money for free now, and we're going to take all of it out of your next paycheck, at least you would assume so. So having like an APR, calculating it out by how long the year is, it's not exactly a fair comparison because it's a different kind of loan, right?
It is. Like, a lot of times you're looking at it as like a $35 flat fee or things like that, but they still calculate it with APR rates. It's part of the way that they've tried to regulate that and make sure that those fees don't get exorbitantly high. Some places actually do it by every $100, and some of them do it just as a flat rate for your paycheck. That's why they can range so wildly. They start somewhere in the neighborhood of 300 to 400% interest rate, and can go up to about 1,900%.
Those are bad numbers for those of you who are financially illiterate, and you're like, I don't understand. Those are the bad ones. That's not the loan you want.
Yeah, and I could see the reason why these are so prevalent. Whenever I was younger and it was like, all right, how am I going to make it like 5 more days? I got to get my rent. And to have a $35 fee to not piss off the landlord, it seems like it's not that bad of a deal. But it really is whenever this becomes cyclical that it becomes a major, major problem.
Right, because you're dipping into that, the future paycheck early, which is fine for like one time. But once you've done that, if you have a system set up where suddenly you need to have that early, and you're doing that every month, that you're just going to dig yourself further and further back in time until eventually there's not a paycheck there for you to dig into.
Yeah, you just keep on repeating that cycle over and over and over again. Wells Fargo even had a thing where they knew that you were going to get your direct deposit, so you could just get it early for a nice little $25 fee, which is less than what a lot of these places charge, but it's still something where they're kind of dipping their toes into this payday loan sequence. So it's not even just these little spots that have it.
One that even more people might have used, or at least seen recently, is the tax people who will do your taxes, and if you are impatient to get your refund and don't want to wait, they'll just give you the amount that you would get if you will cede them your refund minus a small fee.
Yeah, and a lot of people are actually facing problems with getting their $1,200 kind of stimulus check because it's not really processed yet. They just got the money from the tax companies. Predatory loans like this have only been around for about 20 years in their modern iteration, and have dominated retail strip malls ever since. There have been forms of it in the past, most notably under President Taft when he had the US Postal Service run a small bank. On one half, you could do a short-term savings where you would get about 2% of a return on fairly small, quick investments, and on the other hand, you could do a payday loan and get about 35% interest. This would actually last until 1967.
That sounds really interesting, actually. The idea of running the post office as kind of a location also where you could do banking through the government.
Yeah, it seems like it could have been a solvent plan, and maybe the USPS would be doing better today if they still had a system like this, or enough people defaulted that they were actually losing money from it.
Yeah, you can never tell on these situations, but they gotta come up with some kind of a plan.
Now, we talked about the cycle that you can get in with this, especially if you have weekly checks that you're having to keep on putting yourself into. This is actually very blatantly put into the business model of some companies. In leaked documents from the Ace Loan Company, we found a diagram that details exactly how this happens, and this is from their internal paperwork. Step 1, customer applies for loan. Step 2, customer is approved for loan. Step 3, the customer exhausts the cash and does not have the ability to pay. Step 4, Ace contacts the customer to offer refinancing or ways to extend the loan. Step 5, the customer cannot make payments and the debt enters collections. Step 6 is actually Step 1, as they use their loan to pay off the loan in an Ouroboros of wasted money and dreams.
Does that make any kind of sense? Like, from their perspective, just endlessly lending money. I guess eventually they get it back because the person is paying fees and stuff, but...
Yeah, every time it goes around, they're just collecting a little fee, a little fee, a little fee, higher interest rate, especially whenever they're extending the loan on that 400 to 1900% interest rate. So all of a sudden they're doing what was supposed to be only a week of gathering interest and turning that into several months.
That's how you know a business is rotten, when their actual aim is to hurt people. Like, that's
you
gross.
Shouldn't be putting that in your official documents as well. Like, that is straight up, we intend to hurt people and get them into this permanent cycle. Yeah. Like, the credit card companies do that to a lot of people, but they're not going to outright say that that's their goal.
And a credit card can be a financial, like, legitimate, real tool that you can use. I guess these could be, too, if you're not in dire, horrible financial straits already. Maybe the real lesson here is don't be poor.
Yeah, one of the lines I have in here says, the interest tackles you, the late fees hold you down, and the cycle of poverty does the rest. It becomes impossibly expensive to be poor. Think of Terry Pratchett's Boots theory of economics.
Yeah, it's not just predatory loans that make it bad for poor people. They just give you a little hope for a few months before you realize, oh, right, this is bad too.
Yeah, now the situation's even worse than it was before. And whenever you can't afford to actually buy quality products, whenever you can't afford to get out of these loops, that's when being poor becomes most expensive. You just really can't break that cycle without major, major changes. On top of all these legal practices, many companies also slip into more illegal territory. Cash America was caught adding massive amounts of fees with no reason onto their loans.
So that's just straight up stealing.
Yeah, just flat out stealing. They would end up having to pay more than $19 million in refunded fines. The court also found that the company, which is one of the biggest in the payday loan game, had been destroying documents in an effort to cover up these fines. They were just trying to straight up sweep it under the rug that they were stealing from people.
It's a good thing there aren't any large American banks that are guilty of very similar practices.
Yeah, like, that's never happened. That could never happen in the modern banking system.
Banks that are, of America, for instance.
Yeah. Banks that have that flag logo.
Just putting fines on people for literally no reason. Although, I guess in their instance, it probably wasn't just poor people. So I guess we can be thankful that at least they were predatory towards everybody.
Yeah, it was consistent theft. Unfortunately, like an athlete giving a third thrust like Hingle McCringleberry, the fine wasn't enough to shut them down.
No, it was probably calculated into their business plan. Legal fines for stealing from people.
Oh, that's what a lot of those supplement companies do, the ones that are selling, like, the Rhino type stuff at gas stations. They're straight up just putting Viagra and sildenafil and these other chemicals into those until a regulatory body tests them, finds out that they're bad, then they pay the fine, change the name of the company, and do it all again. Like, it's just, they build it into these. They claim that it's one thing, give you something completely different, know that it's going to happen eventually, and restart.
You know, it's interesting. This is reminding me of something that I found in my research for last week's Bad Idea. Tino DeAngelis had this exact same thing built into some of his businesses where he'd talk about, like, yep, just had to pay that $100,000 fine. It's one of the costs of doing business. It's like, no, it's not a cost of doing business. It's a deterrent from doing stupid things.
Not enough of a deterrent, apparently.
Apparently not, no.
Some states are trying to rein in the payday loan industry. Arizona, Arkansas, Connecticut, Georgia, Maryland, Massachusetts, New Jersey, New York, North Carolina, Pennsylvania, Vermont, West Virginia, and the District of Columbia all prohibit payday loans. Colorado actually had it on the ballot and almost got rid of it, but they ended up enduring. Texas wanted to put more regulation on them, but one of the most staunch and disruptive senators at the time worked to block the bill. This senator was the head of the board that oversaw management of payday loan companies while owning a huge stake in them. He happened to own 12 payday loan branches. His name is Gary Elkins, who is still a member of the Texas State House, and is one of those examples that makes you think that Sulla taking his legions to Rome wasn't the worst idea you've ever heard.
Listen, we need more businessmen politicians, Tony, because they understand how America runs.
Especially these types that are literally putting in fees to rob people.
Yeah. They wouldn't fall for it if they weren't dumb and poor, though. Really. And they could read that fine print at the very bottom.
Yeah, it's evolutionary economics. It's like, it's just taking them out of the gene pool slowly. Except not, because they usually have more kids.
Sarcasm, by the way, for those of you who are maybe among this dense group.
I don't think we have any of those. We only have smart people listening to this podcast.
I was going to say at the beginning, maybe the ratio of people who have payday loans in our audience is lower, Tony. Because they're
Quite
listening
possibly
here to find out things that they shouldn't be doing. They're already ahead of the curve.
Then again, a lot of people end up finding themselves in a bind at least every once in a while. Hopefully they're just not caught in the loop.
Well, and it comes back to, this is something that I've been thinking about, throughout this episode. A payday loan is not, it's not a good idea, but if you do it just the one time for a single instance of, oh my goodness, here's an extraordinary expense or something that I need to figure out how to smooth over, that's probably a good resource to be able to access.
Yeah, and you might end up paying more fees on a credit card that goes overdrafted or something like that.
Right, but when it becomes the cyclical, endless thing that you can't escape from, and they plan for you not to be able to escape from it, then it's gross. And I don't know exactly where that line is. I don't know how to say, and here exactly is where you need to put the stop to it. But I can tell you that there is a certain level where I'm like, nah, don't like that. Just go into credit card debt. That's the responsible thing to do. Run it up on credit cards. Don't give these losers your money. They only have 20%
and all those other companies.
APR.
I recently consolidated all my credit cards into like one of those lending tree loans or whatever. It's amazing how much the difference is in how much I would be paying over the course of a 20% thing paying off several thousand, and this at 6%. It's kind of refreshing to see that. The math is insane. Don't
go into high interest debt.
Yeah.
I mean, I know that that's simplifying your entire bad idea down to one sentence, but that is, it's a pretty good rule to have. I had some credit card debt. It never felt, I'm glad that I'm out of that, Tony. I regret the very small amount that I did have.
Yeah, and it's like you have to play the game a little bit to develop credit in this country, but you got to be paying them off quick. You can never break that 4-digit mark without dire consequences. When payday loans become outlawed in states, the businesses mutate into something called title loans, where instead of your paycheck being put up, it's your car. You are lending against your vehicle and risking its possession by a payday loan company if you do not pay your loan in time. This could be doubly worse if you are upside down or owe the bank on your loan and they still can find ways to repossess it.
So, before they were just like, we're going to send it to a collection agency, which is a problem, right? But now, they can take your whole car with them to another place, and now you can't go to work in your car.
Yeah, it's just a spinning nightmare of different issues.
The cycle is... man... Everybody gets mad at the guy, like the person who's driving the tow truck, right? The repossessor guy, like that, like it's his fault. I don't necessarily have a beef with those guys because they're just doing the job, but the people who have engineered their entire business so that they can do that every day, like 24/7, those guys are pretty gross, in my opinion. You're just gross. This is almost as bad as the fistula one. I feel like. That was gross on a, like, anatomical, biological level. This is gross on a moral level. I do not approve.
I think I'd rather have a fistula than deal with these people on a regular basis. When Ohio stated that companies could only do 28% on these loans, the industry started to dry up. Then it changed into a mortgage company that would give you a so-called mortgage for as little as $300 plus handling fees. So you could get like your $300 loan and they would consider it a mortgage. You're not technically leveraging your house, you're leveraging your credit. But it's just another way of getting around, like, the verbiage on it. They're very good at finding their way through these legal loopholes.
The law, man. That's the thing about the law. It's specific. And that's great in certain instances. Like, a lawyer's like, okay, well, you said this, but not this.
And it's all outlined in, like, the Short-Term Loan Act. And people just find ways around all this stuff all the time. And you end up just having to put in more laws and more laws and more regulations. And they're still just going to find a way to do it. They're going to find their little loopholes and they're going to keep open. And, I mean, there is obviously demand for it, but there's got to be a way to shut it down at least a little bit, make it more fair. Now, if a state closes enough loopholes, they have one more major loan option: Native American reservations and sovereign immunity. By establishing themselves as a Native American business, they are offering loans with a fun and totally attainable 700% rate. You probably remember the commercials where you can get cash now for up to $10,000. In the fine print of these commercials, you'll read about how that $10,000 will end up costing you $26,000 to pay off. And that's at the minimum payments, but still, that is an insane amount that you end up owing. That's most people who are getting these loans' actual yearly income.
Couldn't there just be a cap on interest? Doesn't it seem like you could reasonably introduce a cap on how much interest somebody could charge on a loan?
Yeah, it seems like you should be able to, and that it should be pretty reasonable. It's like most banks get by with like 6%. Right now, you can get some really, really good rates if you're actually putting up money.
Yeah, this is the Albert makes up fantastical ideas that could be stupid for some reason that I haven't thought of part of the podcast, Tony. So
no, you're just fairness oriented. Like you actually care about people enough to want that.
Right, but I'm trying to imagine there may be some legitimate financial scenario where, hey, yeah, it actually does make sense for somebody somewhere to pay some exorbitant APR. I've tunneled into this nonsense right now, and I'm mad, and I just want these people to go away.
Especially because these people are kind of exploiting the whole Native American thing. They call it rent-a-tribe scams, where you basically partner with somebody who's on a reservation who is a Native American and then like prop up your business on their land so that you can do these sorts of loans. And you just have to have your bank based out of there. You can still send these loans around the country. So in a way, I guess they are helping the tribal people by giving them a cut. But it still seems just really awkward that it's like, well, we're just going to use like this little bit of a like immunity that you guys have, the sovereign immunity, to exploit people even further.
It is something that I think is easy to forget, that a lot of these reservations are, in certain ways anyway, their own separate nations, which is like, thank goodness those people got something of their own.
Yeah, it might not be anywhere they wanted or anything that they wanted compared to what they had, but at least they have this little tiny bit.
But it's
and now they can put casinos on it.
Right, it's close enough, and like close enough in the law and in the geographical region where you can easily slide in under these loopholes and make it all feel legal. And yeah, I don't know. It's still the people who are running these scams are still gross, but I respect that at least we've finally granted some kind of, legal authority to these people to have rule over themselves in the very limited amounts that they still have remaining.
Sovereignty is important.
Yeah, well, especially if you're gonna fight somebody in a battle and win the battle, then you take what you want. I actually don't mind that so much. But if they come to your court and you let them sue you, and your court renders a verdict, you better stick by that verdict.
There are some companies that are trying to fight against these sorts of loans. Like in 2016, Google banned payday loans from advertising, as well as anybody offering loans that exceeded a 36% APR. So it's getting a little bit harder for them to operate. As I said, states are trying to regulate them out of existence. They'll find those loopholes, but in many areas it's getting harder and harder to actually run a business that's going to do this. And one of the strangest things that I found is that they are begging the federal government for bailouts during this crisis because so many people have lost their jobs. They're not able to pay. Like, they've kind of had a run on people not able to get their next check. I honestly think that the government should be looking at offering them business loans if they want to do that 1900% rate that they apply to their people.
The whole bailout thing with the big companies that aren't, I don't know how I feel about it in general, but I definitely don't feel like scum like this deserve to be, hey, it turns out it is tough to make it to that next paycheck, isn't it?
Yeah.
Well,
oh, you're having trouble with paying your rent at the strip mall where you've exploited everybody for decades. Oh, no.
I will not punish anybody in the political process for just thumbing their nose at these guys. I doubt that's going to happen, though, Tony. From either side, this is not a, left or right political statement. I think that just in general, these types of people have their fingers so deep in every aspect of the political system, as is their right to petition. Everybody is allowed to, say what they want to senators and politicians, but they are doing such a good job of it that I think they'll probably get what they're asking for, or some version of it.
Sometimes emergencies happen and people don't have family or friends to bail them out. A payday loan can help put food on a table or pay a medical bill, or even make it so that you're not going to get kicked out of your house for missing rent. But it's something that needs to be used in extreme moderation. Unfortunately for those involved, they can quickly become a cycle where you have to keep lending against your own paycheck every week. Thousands of dollars leak out of a person's income, all in the name of cash a week early, and this basically drives money out of the economy in these areas where people are needing them more and more and more. And it just becomes a thing where even people in the community that aren't involved in these loans are being exploited. Should these services exist? My heart says no, but my pragmatic side says yes. But with the lack of regulation and their ability to charge Sisyphean levels of interest and fees, they will continue to do more harm than good. The entire industry has turned into a clear example of a bad idea and needs to be entirely rehauled.
Yeah, it does somewhat go against our libertarian-ish tendencies to say, bring the hammer down, no more payday loans. Because you want to be like, hey, freedom, guys. But you also want to be like, ew, stop it, you weirdos. This is gross. It feels intentionally deceptive. Whether or not they're outright lying, they are definitely engineering a situation that they don't want you to understand ahead of the time that you get into it.
I totally agree with that.
And that is a horrible way to build a business. Regardless of whether it should be legal or not, it's wrong. I'm happy to make that stand.
That's an easy one to make with these people.
Make your money doing things that could be beneficial to people. You don't have to give your stuff away. I'm super thankful that Walmart's out there. I'll spend my money all the time over there. I'm thankful for Amazon. They're doing great work. I'm not bashing people who are providing a real service. This does not qualify when you're hoodwinking people into coming and giving you their money and essentially drilling them even deeper into debt and poverty than they already were.
And I think that's all I have to say about payday loans right now. If any of you have experience with payday loans that you'd like to share, go to our YouTube, youtube.com/badideas. Throw it in the comments there. You can also see our faces over on that channel. I want to say thank you to all of you for listening, for sharing, and for just generally being awesome through this whole crisis. I hope you have an excellent week.
Have a good one, guys.